For centuries, storing your money meant relying on physical permanence, thick steel, heavy iron, and thousands of pounds of security. These are institutions built to project immovable authority. But that steel cannot protect those institutions from the screen in your pocket. A digital social network is now actively attempting to digest traditional banking functions entirely. The strategy relies on building an everything app. The goal is to create an unbroken loop between your social life and your wallet. You scroll through a feed, chat with a friend, and split a bill, all without closing the application. This model has already reached scale in Eastern markets. On platforms like Alipay in China, users pay utility bills, book flights, and manage investments within a single interface. This creates a direct challenge to the Western financial model, testing whether legacy banks can maintain dominance against a platform aiming to make them invisible. In April 2026, X-Money launched its early public access phase. It targeted a potential audience of 600 million people who already log into the platform monthly. This rollout is the fulfillment of a decades-old goal. In 1999, Elon Musk founded X.com with the intent of creating a central hub for all financial services, a company that eventually merged to become PayPal. This chart tracks the branded checkout growth of legacy platforms like PayPal. By the end of 2025, that growth slowed to just 1%. The traditional web button model is losing its momentum. To reverse that trend, the strategy embeds banking tools directly into the digital town square, making a wire transfer as simple as sending a direct message. 25 years after that initial launch, X-Money represents a scaled attempt to finish that original mission and displace the traditional Western bank. Moving 600 million users requires aggressive incentives. X-Money starts by integrating instant peer-to-peer payments and immediate payouts for platform creators directly into their daily notification tabs. This chart compares typical bank savings yields against the platform's primary lure. X-Money offers a 6% yield to draw cash from legacy accounts. Because a social network cannot hold those funds alone, it uses Cross River Bank as the regulated partner to manage deposits. Once cash is in the app, the platform plans to add lending tools and stock investments. The user never has to leave the ecosystem to handle their financial life. That 6% yield is a structural tool designed to migrate deposits out of the traditional banking system and into the platform's control. This creates a dynamic known as the plumbing paradox. It's a battle between the tech company owning the interface and the bank owning the infrastructure. Whoever controls the screen you tap every day extracts the highest value. They collect the granular user transaction data and the interchange fees generated by every swipe. Meanwhile, the platform leaves the regulated heavy lifting to the partner bank. The legacy institution handles the low-margin work of strict regulatory compliance, daily fraud protection, and capital requirements. The grand architecture of legacy institutions is bypassed. They are demoted into invisible back-end plumbing for a tech company's front-end experience. This shift threatens to strip legacy institutions of their customer-facing role, potentially turning high-margin businesses into a hidden, low-profit utility. But launching a seamless financial app in the West requires navigating a massive legal reality. By May 2025, X Payments LLC secured money transmitter licenses in 40 U.S. states to legally operate. This state-by-state regulatory friction acts as a defensive moat for the banking industry, buying time to reinforce their digital services. X-Money is entering a crowded market. It must fight Apple Pay, Venmo, and Zelle, rivals that have already spent years removing the friction from digital payments. Securing the legal right to move money is a bureaucratic victory, but it does not guarantee that users will abandon the solutions already working on their home screens. Beyond the legal hurdles lies the trust deficit. For the model to work, mainstream consumers must trust their life savings to a social platform historically associated with chaotic discourse and automated bot networks. There is a long history of tech conglomerates in the West attempting to build integrated financial hubs, only to see them fail to gain traction. The launch of X-Money provides a practical trial of whether the Eastern super app model can actually survive in a Western market. This rollout will either rewire how we move money to fulfill a decades-old vision, or it will demonstrate that the Western bank is structurally more resilient than the tech industry realized.